Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano, and today we are going to go over some of what happened yesterday, why I think in particular what we saw was some targeted interventive shorting in order to stimulate a possibly pre-planned options delta crush. So we're going to take a look at that today, as well as think about what things are looking like going forward this week. So that's coming up. Before we get started, we do have to go over to our gratitude. Today's gratitude is going out to Gamma Chad for sponsoring today's article and video breakdown, as well as to our monthly supporters, Not Medical Advice, Master Kurt Lusko, Cosmotropic to Swag 52, and Hey Lucky's aka Faithless Looter. Thank you so much. Really, everyone who's supported thus far will support in the future. Everybody who's been participating up to this point, everyone in any way that contributes to the channel, be that as far as support in this form or through questions, comments, participation, every single thing helps, and helps bring this whole endeavor forward. So thank you very much to everyone. So today, right, obviously wake up call on Monday, right? Getting this kind of like, okay, here we go, sitting down. What are we going to get? And then first 3 minutes, we just dump 50 some odd cents. Actually, this was closer to a 70-cent drop pretty much in basically like 3 minutes. So what was going on there? Like what was, we're talking about how, stuff's not really looking too exciting options wise. Does look like we're getting moved around with respect to options. So what's going on, right? You'll recall yesterday I talked about how, especially around our at the money strikes, so around 24, 23, 50, 23, we did have a large concentration of short calls build up, but not really much in terms of the put side of things. But especially at $24, we had this big cover call position, or at least short call position, developing going into the long weekend last week. Initially, my outlook looking at that was, all right, well, I mean, this is definitely a good play in terms of, well, you got 3.5 days of time to burn off of these. So, even if we open up a little bit down, like those are going to take a pretty decent hit going into next week. I myself saw this sort of stuff developing, and heading into the end of the last week, went ahead and deployed, basically about a month-long covered call spread, basically over the next 4 weeks at a couple different strikes and at a range of different expiries. Part of why I do that is to, in this situation where we have a little bit of uncertainty about like, hey, we're looking at these really low, these all-time kind of historic lows in terms of IV, at least in recent years. Don't want to get caught. Number one, don't want to get caught in a volatility pump to the upside. Don't want to get assigned at a strike that's, maybe a little bit too low. And number three, right, I don't want to miss out on the opportunity to go ahead and capture some of that volatility in the event that it does get walked back up to the upside decently quickly. It does spike, with the intent on the part of whoever's spiking it to then go ahead and move it back down. So by going with a multi-strike, multi-expiry spread, you can distribute that risk, and it ends up giving you better returns than you would by just kind of playing it conservatively. It sacrifices less of that kind of potential returns that you might miss out on if you do get a volatility spike, especially if, you take your entire position and you target a month or 2 months out, right? You kind of, in a low volatility period, you're going to miss out on a spike like that, right? So this distributes some of that risk while also allowing for the flexibility to go ahead and redeploy in the event that you do get some sort of volatility event like that. But if no volatility comes in, then you do get to benefit from going ahead and at least selling part of your position, a month out and being able to take in some of that premium. So, definitely I mean, in terms of my own trading, that's how I reacted to that. I did see that as, being connected, especially to this time component. But yeah, to then kind of come out of the open and just get torpedoed was a very interesting turn of events. And we might say, okay, what's going on there? Was this something, unpinning options wise? Like what was really happening? And, this is one of those cases, I think, where it's pretty straightforward if we go ahead and look at what's going on, or what was going on in our extended lending liquidity, right? We can see here, oh, look at this, right? This is kind of one of those obvious points, right? Where we see shares basically right off the open precipitously decline, right? We go from 2.7 million to borrow 7 minutes before open to then at 10 a.m., we're down to 1.1 million shares. So this move looks like somebody less than 7 minutes before the open went out, borrowed 1.6 million shares of GameStop at least, and just straight dumped them on the tape to adjust our price down like that. We kind of hung out there until about midday. And then later in the day, it does look like somebody went ahead and took some more to then walk us down basically into what would have been after hours. So another 300,000 to 400,000 shares to kind of continue to drag us down a little bit into the close there. Although, we do already see some of that recovering here in our price action pre-market. So we got up to, we actually dipped, I should say, we popped a little bit right above 23 there into, just above, just right here. So with that recovery back up, pre-market here basically up to 23, slightly above 23.01. What that kind of says to me is that this move right here, so we can see, I imagine this was probably that second wave of shorting, second smaller wave of shorting. Probably what we see here is this, right? Because we had moved back up to VWAP, actually slightly over VWAP. And then this got adjusted back down. So I think basically what we saw here was probably this short position, maybe even some of this one being closed out. At least in part there. So what also looks like that may have tied into that, whoever made that very large $24 short call trade into the weekend did go ahead and close that out. We did have, once again, the majority of our volume was off exchange. If we include, right, it's about 2 million in terms of direct shorting. So, besides off exchange volume and that direct shorting, that direct shorting was probably close to half of our total volume on the day. That was, lit. So very, very interesting, right? If we get rid of this almost 7 million in off exchange volume. So very, very interesting. Really not what you would expect from a high volume, otherwise a high volume day, right? Over 10 million we would expect some more movement in the price, but right after taking into account that most of what we're seeing is not happening on exchange. And that's really been the case, especially since we've seen these convertible bond offerings. Contextually this week, still looking at, right, we talked about yesterday, especially taking a look at index options positioning and getting a sense of how traders are thinking about having themselves set up into this midweek tariff pause deadline, this 90-day deadline. Yesterday, of course, we got Scott Bessent, Treasury Secretary, talking about deals that are going to be coming through. Does not look like we got any of those really yesterday, unless I missed something here. Let's take a quick peek. Yeah, it doesn't look like it. We got some executive orders. Oh yeah, they said there were some tariffs that were announced. So there was a Thailand thing announced, Cambodia, some East Asia stuff, Serbia. Yeah, okay. They just didn't. It looks like these just didn't come through with deals yet. So my guess is these are announcements that are meant to stimulate the deal question. Just kind of get those moving. The price action did stay above 620, which, as we can see here, right, is and was a very important sort of intraday threshold that the price needed to stay above before we would start to see volatility ramp up. So obviously ramped up a little bit as we got into some of this less overtly call gex dominant positioning here, these levels across our expiries. As we, you can see here, right, 620, this is our last call gex dominant position. As we move past this, volatility is going to ramp up basically as these puts start getting hedged and we start moving to the downside. So this is going to work kind of like an inverse gamma ramp that then can kind of move us more quickly to the downside. So really all eyes are going to be on the 620 level. Again, we did hold it yesterday. If it doesn't hold today, then it does look like that's going to start to ramp up, especially as we get down towards 610, 605, 600. We're going to see volatility spike there. Interestingly, in terms of what we're looking at, expiry by expiry, we did stabilize a little bit. So our call gamma is front loaded. So we are call gex front loaded, basically going into the next 2 to 3, basically into the end of the week. Although then we did soften somewhat going into both July OPEX and August OPEX. So, I mean, a lot of it is going to depend probably on the nature of these announcements. I suspect that we will have some kind of pre-planned consolidation unless we get some kind of crazy bullish news on the tariff side of things. It does seem like that's in the books. That's set up for us structurally based on some momentum, what we're looking at in terms of technicals. We did look like we were overextended there. So I would anticipate something of a consolidation to take more than a day to play out, even if it doesn't look like what things look like in March and April. So have to keep an eye on that. In terms of options positioning, really kind of neutral. Not really any notable skews to talk about. The biggest trade, of course, was that this $24 very short term call position got walked in pretty hard here, right? So whoever had this 10,000 call position decided to go ahead and close that out, bought that to close in the middle of yesterday's trading, actually before we got that second wave of shorting, very curiously. So yeah, that lost quite a bit of value. I think it was in the 40s or 50s. So that's about a 75%. That's about a 75% value loss. Yeah, and a lot of stuff got crushed yesterday. A lot of options got delta crushed because, of course, IV is so low. Early August calls they got shellacked. 50% loss on a lot of end of July strikes. So July 25 strikes, August 1 strikes. A lot of stuff lost a ton of value. Stuff going into this week too. I had part of my call spread was aimed for this end of this week, and that was looking like 75 to 80% value loss immediately, like right off the open. That wasn't something I guess you always have to consider, right? Especially in these lower volatility and low lit volume conditions. We have seen this before. It doesn't take that much in the way of interventive shorting to go ahead and really cause some major fluctuations in the options market. So this looked like a move that was specifically aimed toward that. Maybe there was something else going on in the background with swaps. I don't remember seeing anything particularly into the 7th, but 7th or 8th, maybe the 8th. I don't particularly recall, but maybe it was something swap related. But in any case, anybody who was short options in particular, so whoever this was with this very large short $24 call position, congratulations on the earnings, I guess. So max paying down to $23 for this week. Gamma exposure wise, again, not a lot in the way of changes. We do have a lot of short puts down in this area, so below $23. $20, of course, is a very, very stable long call position. So these are trader net long calls. So, I mean, we'll have to see if we continue to move down, although that doesn't look like what we'll do. If we do go ahead and move down, whether we'll get that 2150 or so support. I mean, that was our kind of bottoming out during the bond offering. 23 looks like it's going to be our major inflection point there. If we do move up above 23, we do have kind of 25, this very large $25 call wall position as an overhead target to kind of move up through these net call positions. But I anticipate kind of getting stuck, again, because actual volume, like authentic organic volume, is so low right now. I would imagine first kind of a bouncing between 23, 24, with maybe, right, if something else, if we get somebody kind of picking us up a bit. Maybe we can move over 24 again, but maybe they set us up to kind of run this $2 range back to the upside after they moved us down into this area. Almost, got used up about 2/3 of the available lending liquidity, at least per international interactive brokers, excuse me, to do that. So not a lot, right? I mean, more of this, right? That's kind of what we said yesterday, at least what I'm looking at here. What I've seen them do, what our current volume looks like. Um, still probably waiting on something to kind of pick us up. I'm not really seeing anything in particular that would take us back 25 over 25 again. So yesterday we talked about this. If we do get some movement in Bitcoin, in reaction to, say, this market correction that may be coming today or tomorrow as a result of whatever Treasury Secretary Bessent announces, that may give us a little bit of pickup underneath us, juice up volatility a little bit if Bitcoin does go ahead and move up to 120. But it's kind of hanging out, waiting for waiting for the tariff announcement, I think, to go ahead and come across. So until then, right, we're still waiting, holding our breath, continuing to manage in terms of my own trading this cover call spread over the next few weeks. So we'll see what happens. We'll keep monitoring the situation. Obviously, take a look at what's going on, lending liquidity wise, price action wise. Keep an eye on what's going on in terms of our broader market context, and have some things to talk about tomorrow and this Friday's live stream. So looking forward to seeing everybody then. And good luck out there. Good luck with your trades. And let's go GME. We'll see everybody.